The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. This is known as Christmas Day for pattern recognition traders. As you can see, I've posted into Tiger TV the short-term 5-minute chart going over the last 2 days in both the S&P and the NASDAQ. And as you can see, we completed 3 drive to a top pattern in both of those, also completing ABCDs from the July 29th through where we are on August 1st. The reason why it's Christmas Day for those who like pattern recognition is that we have a new moon tomorrow. In fact, that starts as of today, really, and goes through the 4th, but the actual new moon will be tomorrow. Take a look at your daily charts on the NASDAQ. We have a very interesting pattern here that deserves your attention. We'll take a look at it here because it's got a lot of things that make us very, very interested from a risk standpoint. First of all, it's completing a 1.618 expansion from the last time we had a correction in the NASDAQ, which was when Moses was floating down the Nile in his basket. That was back on the 27th on that Brexit thing that we had. Market's been up almost every day. It had one down day. That's actually 2 down days during that whole run. And that completed a 1.618 expansion of that move. And more importantly, it took out the high from November of last year and also the high of May the 19th of 2015, which when we had Norm Winsky on with that new moon and Mercury going retrograde. Now we have Uranus going retrograde and we have a new moon, and the NASDAQ made a higher high. Are you setting down, boys and girls? By the amount of 1 point at 49,041. The old high was 49,039.75. So it was 1 1/4 point higher. And so there's your risk. I mean, if it gets above 41.40, you get back to McDonald's and start flipping burgers again. But if it's right, it's got some real interesting possibilities from this leather. In addition, if you're looking at a market that would be considered just a tad overbought, if we look at the VIX index here, you'll be seeing here that we are in new low ground in the VIX, and we'll probably be new low today when we open in the VIX. But this thing is really set up to do a flying Walinda. And those of you that don't remember the Walinda family, they were from Hungary, very, very famous acrobats during the 1970s and 80s. I think they're still, I still think they're still doing their thing, but they're not as nearly as popular as we usually see. When we come to our break at the second half hour, we're going to have Tom Beck from Volume Dynamics on. He's in the den almost every day. Has done a great job looking at volume, and he's going to be talking to us about the gold market. The gold market continues to look pretty good. The $64 question is, have we made this major top in gold where we had the the expanding triangle 1, 2, 3, 4, 5. We need to get above 1380 to do that. So far we've been as high as 1360 last night, which was nothing more than the 61% retracement of that last move that we had. Now here's when you're long gold, and we wanted to be buying gold around that 20 1328 level down on the 24th of July, and it's had a nice run. But here you're setting in it, and you're looking for a potential here of gold going another $80 higher than where it is right now. And you're already long, but you're giving some of your profits back to the tune of about $10 an ounce. Now, what do you do? Well, you have to make a decision, and the main thing that you have to do is say, okay, how much do you have to risk to get that last $80? So you've got to pick a figure, and on this particular one, we figured just a little bit more than $17 an ounce. So we figured $20 an ounce. So we'll use a stop $20 below any high that we make, and that would come in at around the 2039 level. 1339 level as it sets right now, but it's still got a chance. We've had 4 up days. There's a possibility, of course, that the high that we made on Friday was the C leg of an ABCD move that would take it down to 1278. So that's what we have to wait and see. So I think, just looking at it, you've got to give it a little bit of breathing room because it's bullish. And if you look at this chart that we posted in here, the reason why it looks bullish, if you look at it during June, I mean, we had a 382 retracement during the Brexit thing. Then it rallied $110 an ounce. Then we had another 382 retracement, and the markets rallied about $40 an ounce. So it's in a good position now. The $64 question is, do you give up a little bit to try to make a little bit more? And at this particular time, I think that's that's probably the best strategy. If you're not in, you really need to wait for some type of correction, to get in the gold. But that's the way it looks. Silver looks very similar, very similar to the gold. And if you look at them both together, you'll see that there's been a really tandem move here. In other words, the metals are moving together now. Before they weren't, but as you can see here, they are moving together, and that's actually a good sign. So that's another factor that you want to try to stay long, the gold, and you're certainly in the direction of the trend. And that's always a good thing, as Basil and Steve Rhodes and Tom O'Brien have preached quite a bit. Getting back to that question someone's asked a question about, Goldman Sachs has come out with a sell on stocks, and then also Jeff Grundlack from Double Line has come out and said sell everything except gold. And so there's 2 people in the G category, Grundlack and Goldman Sachs, who are moving out of stocks, but we'll see. Remember, folks, this stock market, if you looked at the NASDAQ, even though it made new highs, one of the biggest divergences that we pointed out, over this period of time is the fact that the New York Stock Exchange Index, which is the real stock market, has basically really not done anything other than go sideways since July 14th. We have not taken out that high. And, Tom O'Brien said that high was going to be around 10,819, and it got to 10,810, which is pretty close in hand grenades and tiddlywinks. So that's probably it. And that's 2 weeks ago. That's when we had the full moon back on the 14th. Now we're staring at this new moon at a lower level. So that's another reason to look at. Just a lot of things. But the primary one is that you've got that 1.618 expansion on the NASDAQ, and anything above 41 now would tell you that you're wrong, and you've got to stand aside. But this could have a 40-to-1 payoff if it's right. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks. We're going to take a look at the Treasury bond market now. We're looking at the long-term weekly. You can see that 1.618 expansion that came in at the 177.14 level. We're now trading about 4 handles under that. We did get 7 handles under it, but right now we have just completed a 61% retracement as of Friday. We talked about that on the show around that 71.14 level. And as you can see, we've dropped a little over a point from that level. So if you were able to sell that 61% retracement up there, which was also a perfect ABCD Gartley pattern, then you're looking at either a break-even trade here or book part of it and use a break-even stop on the rest of the position. That's the way, from a money management standpoint, that's what you would be looking at. One of the questions that I got over the weekend from one of our listeners from Korea, believe it or not, asked me what was my worst day ever in trading. Well, I would have to say it was October of 1974. That's where I had washed out a 7-figure account being stupid over the past 10 and a half weeks. It actually happened to be, in retrospect, I was thinking about, even though it was my worst day of losing money, it was probably the best day ever, because that was the day that forced me to start studying the Gartley book and really got me, back on my feet. But that was neither here nor there. Back in 1974, folks, we didn't have the CFTC. They didn't come in until 1975. So all the margins were actually done by the CME, Chicago Mercantile Exchange, or the Chicago Board of Trade and their members. So the members actually set the margin. So you could trade in a debit balance. In other words, if you owed the firm, money like 5 or 10 grand, they could still let you trade, up to them, because they were taking the risk, and they did allow that. I was at Conti Commodity at the time, and they allowed me to trade out of my $2,800 debit, which I did over the next 7 or 8 days, and then I didn't trade again for well over a year, as all I did was studying. On the second half of this is what was my best day ever, and that was, without a doubt, it was January 16th, 1991, when we were having Desert Storm War. We didn't have overnight markets, of course, in the S&P and stuff like that, or crude oil or any of those things, but I was short crude oil on a butterfly pattern. I was short gold on a Gartley pattern, and gold was down $50 that day, and crude oil was down over $11 a barrel, on its way from going from 42 all the way down to $11 a barrel. So that was a couple of my days anyway. But those are in the past, and now we're in the future. Anyway, the bonds they're not acting very good, folks. I mean, it took them 9 to 10 days to make a 61% retracement. And that's it. Mr. Z's asked a question about potato futures. No, Simplot, the guy from Idaho, he broke the contract in futures through a court battle many years ago, and that's what they have not traded potato futures. I might be wrong on that. They might have brought the contract back, but I don't think so. Anyway, we'll see. But that's from my memory. I don't believe that we're trading futures. I'll ask Rich Anderson, and he will certainly, be able to answer that question. But we'll keep an eye on that. But anyway, bonds and notes. You'd think with stocks going up like this that we would have some type of a, movement in bonds and notes. But all they're doing is making retracements, and they're both making 61% retracements. And the same thing is happening with the German Bund. But remember, you've got more than half of the free world using negative interest rates. So, people are bought into that system that was stimulated by quantitative easing, and of course the things that are going on in Japan. And I certainly don't think that's the right thing to do. Now, if you want to see a scary chart, when you stop and think that the Japanese government is basically the one that is, footing the bill for all this floating that they're doing, look at the Japanese stock market over the past year and a half, folks. Take a look at this. I mean, this is flat out scary. I mean, we had an ABCD move, that finished, way back in February. We didn't do anything. We made a double bottom on the 24th of July, and all we were able to do was make a 61% retracement of the high from April. Are you kidding me? You'd have to be a magician to figure out how to be long. Well, you could put a stop in, of course, but this is and remember, this used to be 39,900 back in 1989. So this is not a bullish chart. And if you look at the same thing with the Hang Seng, you're looking at the same thing. It's really, quite a bit. And if you're correct, if you look at the Nikkei over the past 25 years, you'll see that it's been in a tremendous downtrend, and it bottomed, I believe, around 7,000, around 2004, and it's been bouncing around during that time. There's one other date that's very important, and this comes from our good friend, because we have this new moon that is coming in today. We also have a GAN cycle date that we got from our good friend Jim Flanagan, who is the #1 premier GAN man that I've ever met, and that is also reiterated by my good friend Jim Twentyman. No one is better than GAN than Mr. Flanagan out of Los Angeles. And you'll notice here, this is a 60-year cycle. This goes back into the 50s. And also, remember, too, that we broke a record this past week, folks. This is the longest period in 50 years where the stock market has been in this tight of trading range. Think about that. This is a really, really tight trading range for over a 50-year period, these last 3 weeks. And we see that in the New York Stock Exchange Index that we've already posted. So something big is getting ready to happen. I don't know what the outlier event is going to be, but it's probably going to be something that's just going to scare the bejeebies out of us, and we'll see what's happening. But boy, you've got a lot of reasons here to take a look at the short side of some of these things that we talked about, the S&P and the NASDAQ. And the Dow Jones had the same type of a pattern, but the difference is the Dow Jones was only making a 61% retracement last night when we were making a 3 drive to a top pattern in the in the 3 drive to a top pattern in the NASDAQ and also in the S&P. The Dow Jones was only making a 61% retracement. So you got a lot of divergences going across here, and the fact that the VIX index is just a little bit overbought or oversold. So this thing's getting ready to move. This got all the factors necessary to make it what we call a widows and orphans type trade. So you have to give Sister Mary Perpetual a call there at the Church of the Kings and Queens in order to put them into that trade, because it's a very, very low risk with a high profit potential. But again, if we get above 2180 in the S&P futures, or above 49.42 in the NASDAQ futures, we have to get back to the orphanage and get their money back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we'll hopefully have Tom Beck on here in just a little bit of volume dynamics. So far, we're having a rough time getting in touch with him, but that should change in just a bit. Okay, let's move on to the U.S. dollar. We've talked about that last week because that was our key trading spot. In other words, to go long the euro, which is basically short the U.S. dollar index. And we had a really nice Gartley up in that area. And now we've come down quite a bit. We've hit the 50% retracement from the low during the Brexit movement. But the key factor to watch here is if we take a look at the hourly chart here on the euro, you're going to see a very, very powerful move that has happened in the euro from that 109 level as we had a beautiful pattern down there. That was the 61% retracement on the daily. It was also an ABCD on the daily. It had everything that you'd want. And that is what you should see when you look at the dollar index, because that's the exact opposite. In other words, if the dollar index is giving you a sale, the euro will be giving you a buy because it's 53% weighted of all of the dollar index, which is quite high. Anyway, if we look at this U.S. dollar euro chart, you'll see that we've had these small corrections that we had on the 29th. The market backed off about 60 pips. Last night we had the same situation. We didn't get any lower than 111.50, which was 60 pips off of the high that we made up at 112 on Friday. This usually means that you're heading a little bit higher. That's what it usually means. Now, if we get below 111.40, then that would not be correct, and the U.S. dollar would probably continue to rally a little bit. But right now, this is what we're looking at. We're seeing the same thing in the British pound at this 131.50 level. But the one that is the real key, the canary in the coal mine, is the move in the Japanese yen, folks. That has been the one that is been the one that scared quite a few people. Unfortunately, I didn't have the chart for this darn thing this morning, so we'll have to keep an eye on that. But it's gone below 102. It dropped 2.5% as of last week when they came out with one of their economic programs. They're going to come out with another one today, so we'll probably see some more movement in the dollar yen also. But that's also something that will affect these markets a great deal. We have Great Britain is going to be talking about lowering their interest rates. That's one of the things they are assumed that they're going to be doing, but that's neither here nor there until they do it. There's a lot of talk on the internet and also from Bloomberg and stuff about the fact that maybe Japan has pulled out all the stops and they don't have any more cards to play. Folks, when you're playing with paper money, you always have cards to play. It's a question of when the players don't want to sit down at the table. That's when you have the problem. So remember, that's a very, very important thing to keep in mind, that they can keep pumping this thing. And this isn't a giant experiment, so you don't really know, when it's going to get over. But it's going to end badly. That I'm absolutely sure of. Things like this just do not end the way that you would like to see them end. So keep in mind that that's important. Since we're on the currencies here, let's switch to the Canadian dollar, and then we can quickly move in to the crude oil market. And you'll see here that we have a movement here in crude where we came down, in the Canadian dollar, where we came down below the 130 level. We've rallied up a little bit. We're trading around 130.50 right now, and that's been the reason for the sell-off in crude oil. Crude oil moved $1,000 from our buy point on between Friday and today. We were buying that around the 40.67 level, and it's had a pretty good run. It got up to 41.80 overnight, and now it's backed off to the 78% retracement. If you happen to be in that crude oil trade, folks, the way I would handle that would be to put your stop at break even, say around 40.70, something like that, because that's just common sense. Because if you were risking 80 cents on this, and then you made 1,000, that's a total of 180 pips. Boy, that if you gave all that back up and lost, that means your loss on the trade was $1,800 and not $800. That's not very smart. Mark Douglas used to preach that this is a game of making money. It's not a game of being right or wrong. So it'd be better to put your stop in at your break-even point and then look at it at another time, because both gasoline futures and heating oil futures are holding up above those numbers by quite a bit. But the thing that you want to keep in mind that these things can change very, very quickly, and they're all related to the U.S. dollar. And if the U.S. dollar starts to strengthen, then this is going to cause commodity prices to back off. And a perfect example of that would be in the soybean market. We had a 45-cent move in beans on Friday, and they came in and opened lower on Sunday night and gave 2/3 of it back. So, that's another reason that you've got to be really careful, because these markets they're responding to the slightest bit of news on the weather market as far as the grains, and in the currencies and bonds and stocks, it's basically what the Federal Reserve banks around the world are doing. So you have to be, kind of flexible, when you're watching that. I've been asked to put up the chart that I talked about, which was the Dow Jones chart overnight. As you can see here, we made a 61% retracement in the Dow Jones at 18,455. That was, we've had lower tops ever since July 19th, whereas we made new highs, of course, in the S&P, and we made new highs, of course, in the NASDAQ. Remember, those are just a few stocks because those are cap weighted, and the Dow Jones are price weighted. So there's a big difference. The one you have to really pay attention to is that New York Stock Exchange Index, and that one hasn't made new highs. It's only made a 78% retracement from the May 19th high, and that also was a new moon. So this is going to be a real interesting few days here to see what's going on, with some of these things that we're paying attention to. And then we will get along to see what's going on here. Okay, evidently we have someone's asked a question about who were the gentlemen that gave the sell signals today in the market. Goldman Sachs came out and said over the next 3 months to be underweighted stocks. That was our good friends, Goldman Sachs, who always have our back. We know that. And then Jeff Grundlack, I believe, of Double Line, a hedge fund, came out and said to sell everything. Sell the kids, sell the boat, sell the car. Don't sell the gold, but sell everything else. So that's what Jeff is saying. And he's bearish bonds. Also, he and I are the only two on the planet that are bearish bonds. But, well, maybe we're on different planets. That could be it, too. We'll see. Okay, we have a question about Tesla. I don't really do much in stocks, but that stock has held up relatively well. Hold on, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it.
Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're getting a little selling starting in the market. We're actually down a bit now, as opposed to being up quite a bit like we were earlier. Whether that's due to the Goldman Sachs movement or recommendation or Jeff Grunlack, who knows? Most of the people don't pay too much attention to those things, but there are some people that do, and you do get shorter-term moves. But we have dropped, quite a bit from. We dropped 16 handles in the S&P E-mini, which is it's quite a bit because we haven't had moves like that very much. So this is going to be interesting today. And of course, anytime around this lunar time frame, we always get a little. Well, usually we get some pretty good volatility. We haven't over the last couple of weeks. If you remember, we had our last full moon on the 15th. And did virtually nothing, but maybe this will be the one that kicks in. New moons usually have more power than full moons, and the reason for that is it's at conjunction. In other words, the moon is lined up directly next to the sun, and that to the to the Earth. Between the two of them, that means it's at 0 degrees, and then when it goes around the backside to make the full moon, it's at 180 degrees, and that's at opposition. So this one happens to be at conjunction 0 degrees, which means the starting point from traditional astrologers. So we'll wait and see. As we look at these, when you first come down today, we're already at the first support level here at 2162. Anything below 2157 would trigger at least an expansion move down in the S&P E-mini, somewhere around that magic level that we've talked about several times, which is the 2145 level. Because below 2145, you put a stamp on it and mail it because it's finished. But right now we're trading at 2164, so it's still holding up, but it's down well over 14 points from the three drive pattern that we had last night in both the NASDAQ and the E-mini S&P. We also had the same thing in the Dow Jones, but the Dow Jones was only making a 61% retracement from the high on July 19th that we talked about. We've had a question here about this U.S. dollar and where we think it could go. This is one of the charts that we focused on last week when we were down at that 109 level, which was the euro versus the U.S. dollar. As you can see, we had a pretty good rally all last week, closing at around 111.75. We're trading not too far from that right now. That's just the exact opposite of what the dollar index is doing. So this is probably just, figuring out some way to go through a congestion period here after this big run that we had from Wednesday, Thursday, and Friday of last week. It's probably just digesting, some of those gains and profits. But anything below, 111. In this would certainly be highly suspect as a bull move. So we'll have to keep in mind. Now the crude oil, the September crude oil, has come down and touched the exact 78% retracement down here at this 40.70 level. So you don't want it to get below 40.65. So you don't have to risk very much here in crude oil if you're watching it here. If you're already long, that's where your stop would be, 40.65. I know at one time it had $1,000 profit in it last night, but unless you were trading it all night, you didn't get much of a chance, to do anything about that. So you just have to wait and see how the market unfolds. But right now you'd be in a risk-free situation in this, and you certainly wouldn't have to lose any sleep. In fact, not even watch it, because it would be better to just let it do its own thing, and then you don't have to be concerned of it. Because most of the time you're looking at the monitor, folks, you're wasting your time. And the reason for that is that no one else is watching the monitors most of the time like we are, like you folks do. And I don't. I only look at the monitors, probably 10 times a day, about every 15 minutes or so. I'll double check them. I do other things during that time. But looking at the monitor, watching the prices go up and down is not a good thing. And the reason why is if you're long, you focus on the upticks. If you're short, you focus on the downticks. That's the nature of the human being, because you want to keep from being protect yourself against pain. And if you're long and prices are going down, that's pain. If you're short and prices are going up, that's pain. And so you tend to focus on the ones that are working and not watch the ones that are not working. And that's absolutely the wrong thing to do. So that's the key here. Gold is still trading around at $13.55. It's only backed off a few dollars from the high, which I think is still pretty good. But we really need gold to get above $13.80. And if it gets above $13.80, it has a really high probability of making $14.75. And above $14.75, boy, then that's going to be a different thing, because now you're up $470 off the low in December, and that's more than halfway back of the whole move down, and it did it in only a few months. Wow, you'd be looking at something really spectacular in gold. If we do get a break in gold down to $12.75, you've got to take a look at it from the long term there, because that would be the first ABCD correction since we had the ABCD correction back in March. On March the 19th, we had an ABCD coming in at 1202. That was the first one that we had, and this would be the second one should we get down to 1275. And that's a possibility, because we have not taken those highs out, and all we did Friday was make a 61% retracement of the high from July the 5th. So this is still a possibility. We'll have to, do one thing at a time. The bonds are still selling off. We're down about 1.5 points now from the 61% retracement, so they're still heading lower. There should be some pretty strong support here in the bonds at this 173 level, and the reason for that is it's a 61% retracement from the low that we made, back on Thursday. So there's a possibility that could be an interesting move here, because anything below 170, 220, 172.10 on the bonds, and that's almost a full point from where we are right now, would really say, whoa, this is getting ready to make a much larger, A, B, C, D. Remember, the whole world believes that there's going to be, lower interest rates or even negative interest rates, across the world. And this chart is telling us maybe that's not the case. So we want to watch that one also. Okay. Someone's asked a question about Apple. We believe that Apple was a sale when it got up to that 104 level. That was a 60%, 61% retracement of the last move down. And, that's another one that is, it's still trading at, it's still trading at that same area. High today is 104.98. So it's still in that ballpark for a potential short candidate, at least from looking at it from an ABCD structure that we've looked at several times. Unfortunately, I don't have that old Apple chart in there because that was from 2 weeks ago. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we started out today's show pointing out the three drive pattern that we had in the NASDAQ, also in the S&P 500 overnight, of course, and then also in the Dow Jones, a three drive pattern, but it was only making a 61% retracement from the high on July 19th. We pointed this out because we're in the zone for the new moon, which is tomorrow, and so that expands all the way to the 3rd of August, of course, but we're right in the zone for it. And the second part of this is that the VIX index is incredibly oversold, near record levels. So all these things line up for what we would think would be a relatively low-risk trade. Now, any move above 2180 in the S&P, which is 15 points from where it is right now, we would certainly be wrong on that. And also in the NASDAQ, which would be at the 4741 area. And we're quite a ways from that level also. So that's what I would be focusing on today, is to keep an eye on that, because there's a lot of things happening. And the primary thing is the fact that the NASDAQ was able to make that 1.618 expansion on the daily. We couldn't make a new high in the New York Stock Exchange Index or the Dow Jones. We did do it in the S&P, but only marginally. So it means something from a technical standpoint when you have all that together along with this new moon. And we've seen the new moon too many times. And also we have a major planet, the planet Uranus, has moved into retrograde motion as of last Thursday. So that's another reason to pay particularly strong attention to it. This was pointed out to us by both Shane Smullian of wolftrader.net and then also Astro Trend. Norm Winsky, both of those pointed it out. And if you remember, we had Bill Meridian on from Cycles Research out of Vienna, Austria, and he also was looking for some weakness into August and September, which sort of matched up, to the Bradley model that we've been watching. So just keep in mind that, protect yourself here if you're heavily long the stocks. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.